Well, it was interesting.
We are live.
It is the March 15th. In the economic development housing in general here. I did March weekend, St. Patrick's Day weekend's coming up. It is crossover. And we are on to a different topic. We just voted out the basic budget bill S-246. We're on to S-247. The Vermont Employment Growth Incentive. And we have Rick for less than a half hour. He can come back between 11 and 11:30, but we will have to communicate with him any minor changes that we would like. We are getting a new draft. It's being printed at 1.4. It's up on the screen, so I find my glasses. And we have Cassie and Joan here. We appreciate you being back from wherever you were and being with us. You do have the opportunity to speak proactively if you want, but let's stick with Rick, and then we have time after Rick leaves to address questions to you and talk about the program generally. So we will go to Rick and look at the changes that were made. And we have not looked at a draft that was tailored for the Senate yet. We have been looking at the language around the small business program that came from conversations in the House. So this now has the appropriation in it, which I have discussed with Senate Appropriations. And it probably has something else. I'm gonna put my glasses on and let Rick take over.
Oh, good morning, Rick Sagal, Office of Legislative Counsel. You should have 1.4 at some point in front of you, S-247. So one change the committee requested was the sunset be moved to the front of the bill, to the beginning. Section 1 is now the sunset. So we are repealing the sunset. This would not be an annual review, as it currently is. At Section 1, no other changes to Section 1. Section 2 was previously Section 1. And nothing major changed here except the 3-year change in the initial draft is now, in the introduced draft, is now back to 5 years, back to the statutory original language for the award period. And if you want to stop me on anything, please ask.
Just a quick question.
And then mischievous.
Sorry. No, well, I just realized I should have understood this earlier.
Okay.
I'm new.
That's okay.
I didn't understand that it's currently under annual review. Is this a big, that's a joke.
It has not been under annual review except for the last couple of years.
Okay.
Usually it's like a 5-year or something, and over the last couple of years, they've only extended it a year by year by year.
Okay.
It went 5 and 3 with the getting into a program. It's only a year. There's no certainty.
No, and I can
certainty.
see that. So were there concerns of the folks who wanted it to be an annual
Let's chat.
that we need to talk about later?
Let's talk to Joan about it.
Okay.
Yeah.
I would just like to understand.
It's usually
We are
compromised to
in a
move
very
the bill
different
forward.
place on this from the House. There will be some reconciliation that needs to happen.
Okay.
Quite a bit.
Potentially even a conference committee. So
Yeah.
concerns will continue to unfold and be ironed out where we'll discuss all of this.
And usually the sunset gets put on in order to pacify the folks that have doubts about. Sometimes there's
Right.
bad press, and so it started at 5 when it was new, and then it went to 3, and it increases the comfort level of people who are not comfortable with the
Right. And at the same time, it makes it hard for businesses to plan or to start conversations about getting this incentive. If 2 years there's a sunset. So
Okay.
that broader discussion will continue, and should you like to report this bill, you'd be a part of that in the end game.
It's our best
as well.
Right. That's
Yeah.
so that's another reason I want to understand.
Yeah,
Okay.
yeah, you deserve to
Okay.
understand all of it.
Apologies for using the word annual. That I've just seen the last couple of years has been annual repeal.
Okay.
Being
But
pushed back by a
but that's
year.
accurate.
So,
It forces us to go back and look at it.
but that is not to also.
Okay. Thank you.
Okay, so.
Over and over again.
Yes,
Oh, right.
yes.
That's a song.
song that never ends.
This song over and over and over again. But anyhow, we
So-
do have only a break for another
Okay.
15 minutes.
So we have 5 years going back to the statutory verbiage to the 3 per the committee's request. On page 3, no change to page 3, the proposed change to the economically disadvantaged region, or really the creation of that definition. We went through this last time, you're welcome to read that, how that's being defined.
And that's where we would have put the co-op.
No,
No.
it's further down.
Oh,
Yeah, so,
That's just a definition.
yeah, I'll get to that.
Oh, sorry, okay.
Because if it was that easy, then we probably could come up with it, but it's much more complicated than that. Then you have your forgivable loan, payroll requirement, no changes here, just want to highlight that that's been added. Qualifying business, which applies just to the forgivable loans, 50 or fewer full-time employees.
That's just the
something
big
changed.
difference between
Yeah.
the two.
And no changes here on page 5, on page 6. We have the application information. We added direct cash payment to make clear that's the old traditional veggie program. And we have the creation of the forgivable loan incentive. No change, just want to make that clear. On page 7, line 6. This, I changed the verbiage a little bit. I talked to the commissioner about this. The previous language was unclear as to whether this was upon commencement of the incentive, the business shall be required to. That didn't make much sense, and that made it my fault. So now it's in a forgivable loan application, the business shall be required to ABC. The
And
ABC hasn't changed,
right,
but just the way it was worded.
I
Just to
saw
make sure.
Jessica confirm that. Is Jessica wanting to be present today or? is
I
she-
think we got the Zoom invite for 10:15, so I think she will be.
Oh, okay, yeah,
Yeah,
there we
zooming
go.
in.
Okay.
No other changes to this.
She's also welcome to join sooner.
Okay,
I
I'll
don't know,
let her know.
we're a little discombobulated.
Page 7, no changes there. Page 8. We have C, which is the approval criteria. It gives, this was a slight change here. Well, no, that's right. Jessica suggested that this be reworded to ensure that the council and VITA both get to approve of an application for a
Right.
forgivable loan. I think the language with the word coordination already implies that, you know, if the council, if FEPC or if VITA does not approve of this incentive, either of them
Mhm.
can decline an application.
Right.
Can
If it
I,
was-
sorry, so that's really important for Vita,
Right.
and I'm just looking at.
Kathy, just identify yourself.
Thanks, Cassie Clean, the CEO of Vita, for the record. So that's one of the points that I wanted to make, is that Vita has really the sole authority on the decision to approve or not
Mhm.
the forgivable loan piece.
Mhm.
And the version I previously saw, I haven't had a chance to really read this, was fuzzy on that, so
Okay.
as long as that's made clear.
Which it does here, I think.
Mhm. It's clearer. It says you're coordinating and making the decision together. If you want to further clarify that in the house, I think we all understand that intent and
Yeah, I think
we'd be okay with that.
yeah, I guess the way it says the council,
It's almost like you'd switch it. Vita, in coordination with the council, would have
Right,
the authority.
right.
Well, why can't we just do
We can
that?
just.
Can we
I'm
switch
okay
it?
with-
Is everyone okay switching it? Let's switch it.
Can I just do it
Are
right
you okay
here
with
live?
that, John?
And if you decide to do something else in the house, we'll understand,
But
but
let's leave it,
I really
Edit
give,
on the fly.
yes.
let's do
Yeah,
the best
and this
job.
is, for clarification, it's the loan piece, not the eligibility or the actual
Mhm.
amount of the
Exactly, yeah.
incentive.
I don't think the council is with enough granular detail to do that. You would be in the driver's seat and
Right,
they,
it's the credit decision versus the eligibility and the amount of the
Right.
incentive.
so let's just look at that.
makes sense.
Vermont Economic Development Authority in coordination
So, yeah, let
with the
me,
council. And in accordance with the criteria shall have the authority. Yep,
yeah, we're gonna need to address something here. So
okay.
is it, and I'll let you maybe put in your 2 cents, is it the intent that VITA and the council both have to turn the keys to approve an application?
Yes.
Yes.
Yes, in other words, Betsy won't.
Let's like
approve
Cassie
something-
answer, yeah.
Yeah, Betsy wouldn't approve something that you don't approve.
It's already, so my understanding is Betsy's already approved it from an eligibility and
Otherwise. they-
board amount, otherwise it wouldn't have gotten to the
Okay.
for the loan.
But we're giving you the authority to review and approve an application in
Or not-
coordination
Or
with them.
not,
Right,
Or not.
right.
Right.
So they probably are part of that review, but you are the authority on
Right,
approval.
there's no sort of.
Alone.
Mhm.
the term on is.
No, it's pretty clear.
Okay.
The VEPSI approves the eligibility and VITA approves the loan. Very
That's,
simple.
wanna
So-
make sure that that's what's,
Yeah, well, so the
It's
language
close.
does, the language does give
Yeah.
VITA or the council the ability to not approve an application or to single-handedly approve an application. So if VITA and the council don't agree, you basically have a veto of either.
But I think, would you like it
Well,
clear?
Senator Harris.
Yeah,
So-
just,
oh, go ahead.
my concern is that you would only, the way I read this, you would only be able to approve it in accordance with the criteria set forth in this section, and you may have other criteria that you would want to use, so we might need to wordsmith that a little bit.
That's a good point in that we might approve a different amount, like a lower amount, because
Hmm.
that's what the business can support. So that's where VITA needs to have the authority. And it-
But
Yes.
we keep the language as is and work that out in guidelines, you know,
For the house. I mean,
because we're not,
Yeah.
well, how does the committee feel? Because why don't we circle this in our minds and go through the rest of the
What I think would
language?
be good,
Yeah,
and we're not, I just wanna
Mhm.
get it out on the table, is
Yeah.
since you see this as a sequential process,
Yeah.
I would write it as a sequential
No.
process.
actually,
But,
sorry,
okay.
sorry, this is the visual there. The chart, the flow chart that we
Yes.
submitted shows how it comes in.
Right,
It shows that it comes into VEPSI staff and they are checking the eligibility for veggie and they are then sending it not sequentially so much. In other words, the council's not approving the incentive yet. They are gonna send it to VITA. VITA sends the approval to the VEPSI council.
Joe and I say this with all the love in the world. Did you make this flow chart? Cause that's really, can't read it, but.
Okay, I will take you through that after Rick.
Yeah,
Okay, Rick leaves, but you wanted
Take the
something
color
visual.
off.
It has arrows and it's
Yeah.
very, you know.
yeah.
And you did it overnight, so we appreciate it.
But your point is,
The point is that any business coming in to VEPSI, they are going to staff, talking about staff within the agency, will look it over, decide whether or not it's eligible for veggie. If they opt and are eligible for the loan, it goes to VITA. At the time of the VEPSI council meeting, we will have VITA's decision.
I see,
That to me, this sounds like coordination.
Correct.
Yeah.
That's why
Yeah.
I'm thinking it's
Okay.
okay, but we could work through and establish this.
Yeah.
You don't want people.
I understand the spirit of coordination and I like that. It's just the way that the sentence is structured. It's the council, comma, shall. And that was causing me pause.
And now we have VITA,
VITA
right to the
shall.
council, there's on the fly.
So we feel good enough about this.
Yeah.
That I'd rather you.
Well.
Sort it out more in the house than in the next hour, right? But we're generally. Conferring the authority more to you. In coordination with them and I'd rather not say, oh, spend the next hour like wordsmithing
Yeah.
this, than take it to the house and. Cause it seems now like we know what we know where it's headed.
And line two, the next line, VITA shall provide the underwriting for an application approved by the council.
Mm-hmm.
It's the shell, I think.
And is, again, so is the council approving the application here? That also needed to be wordsmithed.
Wait, what are you saying? Because
So
the
line two.
underwriting is VITA.
Right.
Sure.
Right, but then the application, then the
Okay.
last part, I agree with the first part, but then for an application approved by the council.
Oh,
Yeah.
right, sorry.
And underwriting is not, in my mind, comprehensive, doesn't necessarily include the loan approval
Right.
decision.
Yeah.
It's just crunching numbers.
Right, Rick, in an earlier version, we sent some language to you about the authority to approve or deny a loan application, which was expressly stated as VITA's role.
Yeah.
So the Vermont Economic Development Authority shall provide the underwriting
Yeah.
for an application essentially they approved that was
They-
forwarded by the council. I know that's not
It
legal.
feels like they're
but-
gonna approve the loan
Mhm.
application before them.
And maybe it just means like, shall provide the underwriting and loan decision.
Mhm.
Yeah.
Something that captures
And provide that to the council.
Well, if Vita doesn't,
I think the loan
Approve the
decision
loan.
needs to come before the underwriting.
Well, the underwrite, and then based on the underwriting process, they'll either approve or deny.
Oh, really? I thought
Yeah.
underwriting was like giving it its risk.
It's really the number crunching.
Oh, okay, okay.
so
I actually knew.
Vita needs veto power on this.
Mhm.
On the loan.
Right.
On the
Right.
loan. If
So
they don't.
Should we
do
say for an
credit
application in
Approved.
advance
I
by
think-
the
I think just,
council?
or just approved.
Okay,
What about this? Because it's clear that it's
What-
via in coordination with the council that approves an application. So,
what if you just say for an application period? Shall provide the underwriting loan decision for an application.
I think it
well, what if the
It has to be
application is not
approved.
approved, yeah.
It shall
It
provide.
has to be approved by the council, but, and then Vita can make its own decision about the size of the,
Sorry.
right?
Well,
Or let me ask you.
from what I heard just a minute ago from Joan, is the actual decision by the council isn't made until after we've given our decision on the loan. It goes
Right.
back to the
Yes.
council.
Right.
Handing law.
So it may be the Vermont Economic Development Authority shall provide the underwriting and loan decision for an application.
And provide it to.
I just think application because
Yeah,
like, if we say approved, that's not the loan decision. The
Yeah,
loan decision
it's-
is the
it's
approval,
ambiguous.
so.
Yeah. You know,
We could say an eligible application.
yeah, that's where I was heading, like, for
Yeah.
an application that has,
That has met,
Right,
all the
eligibility.
that has met the eligibility criteria.
Right.
Yeah.
Very good, Madam Chair. Eligible.
That has met the eligibility criteria. Okay, let's do that.
Okay. So
Okay.
it's been a long time since I've edited while we've been sitting here, so. yay for
Crossover day, yeah.
Yeah,
This is 1.5.
like
This is
it.
version 1.5 now.
right.
Okay, so subdivision 3, Vita shall establish loan loss reserves, which shall be supported by funds appropriated by the General Assembly for this purpose. No changes there. Are we okay with that language?
I'm fine with it. It leaves it open to how we apply those loan loss reserves, which we can, address later, but that should be
Yeah,
sort of understood.
and this kind of language, when it goes to finance, can be like further refined. Is it going straight to approves?
Subdivision 4.
I for some reason I thought veggie stuff just goes to finance.
We have,
Sometimes
let's do
it
it.
Yeah.
does.
Anyway, finance or approves, we'll keep, if we need to work on like the financial language.
Subdivision 4, a business denied a forgivable loan incentive may apply for other incentives administered by the council pursuant to subchapter. That's to ensure that we have these two tracks now, right?
Yes,
D, a qualifying business is not eligible for forgivable loans and incentive if it has another to the pending pursuant to this chapter again.
okay.
Calculating the value, nothing changing here. There was a question about the enhanced incentive for cooperatively owned businesses. There is a section not in this bill in statute that addresses certain labor markets and environmental technology businesses. I believe
Yeah.
those are the
Yes.
so those, they have be two separate sections for each of those incentives. So we would need to create a third section and kind of lay out what it's, they're pretty detailed. So
For some reason, it used to be in the bill when it was like draft.
this one,
Yeah.
there may have been the introduced version, may have had some language.
Wait, in 1.4, can we look at page
There was no,
2?
this was not part of the introduced, because we were just eliminating the sunset.
Well, the remember your.
Can we
version was
scroll
just-
back up to page 2 on both? Because
Yeah.
I thought it was further down, but
Page 2.
page 2, line 9, the council may approve the following enhanced incentives.
Yeah, so that is gonna reference section 3334 and section 3335. Those
Yeah.
are more details about they're very. detailed.
Okay, I see what
So that's what I meant. So C, again, I knew that was repealed. I don't know what that one was. It was repealed in 2019.
Mhm.
There's some kind of vetting program that the legislature got rid of.
Okay,
So yeah, we would need to create a new section for these employee-owned, cooperatively owned businesses.
is there a way to? Are we listening to the house? Oh, okay.
That's just-
Oh, without creating a pursuant section, is there a way to say an employee owned or and
It
then
would not
reference
be.
like employee owned statute Or
I mean, it would
too
be,
long for now?
it would be very strange because we have
Okay,
two enhanced
Yeah.
sentences already that have their own sections.
right, I got it.
So,
So Senator Harrison, I think the House would be very open to this discussion. It sounds like Joan is willing to help with that. I could see particular members of House Commerce who would love to help you
So-
write that.
So just a question, so
Yeah.
if, with the idea of getting something mentioned so that it can be discussed in the future.
That's why I was trying to say, like, could we add a line even if it doesn't have a pursuant?
Right.
I think just tagging it when we get to the house, you're gonna present it in the
Yeah.
house as you're the reporter of the
Right.
bill. You'll present it in the house and you'll say, these are the areas that we are hoping will continue working.
I
And
know,
so
like,
they would be able to
yeah,
add those amendments, even if we
Yeah.
don't have anything like
Yes.
this.
Representative
Okay.
Priestley,
Whatever they
Representative
want.
Mulvaney Stamick, Representative
Okay.
Kirk, like, I can think of Representative
also-
Nicole.
Stephanie is your partner on the Vepsi board, so if you and
That's
Stephanie
true.
tee it
Oh,
up,
yeah.
right.
if you and Stephanie tee it up,
Okay.
you'll be in
You
good
have a
shape.
lot of friendliness to employee-owned businesses in
Okay.
that House Commerce Committee. I think it's a great idea.
Okay.
and I will handle this, all members will.
Well, she's staying for the whole session.
She is.
Great, okay.
She managed.
She's transition, but she.
Okay, you have approximately 4 minutes. I'm sorry that I have to leave.
No.
Okay, 4 minutes?
Okay.
We got to the, we got to
Good,
the
thank you,
part.
Senator. Keeping me up.
So we have calculate the value of the incentive, again, no changes to the
Hmm.
last version. Changing the word, growth of benefit, and if you have questions about the commissioner, or Patsy can probably answer questions for you better than I can on that.
Huh?
Then we have page 11. So one change, and this is different than the version I sent out to everybody. I went back on my word because I kept reading it. And I remember Joan and I had this conversation about this word "and" here. So when you're determining the loan amount, in the version I sent earlier this morning, it was an either or. But I recall that it needs to be an "and" because even though you don't have to do the capital investment and the payroll, the increase of payroll track in the forgivable loan, you can do both. And this allows you to do both if you want to do both. If it was an either or, you'd only be able to do one. So this would allow businesses, is that correct?
Correct.
Okay, yes. Something cute my brain like that, what we talked about.
Wow,
So-
that's good catch.
I think I had it in my scratch, I wrote down why we did that, so. I believe that's correct, I'll let the other two people here to talk about that, that needs to be corrected, but. Subdivision 2, no change.
Just a question on that.
Yeah.
So when it says total award under, that means total award of both things. Does it mean total award of employees?
No, just for this one here, for just subdivision A. So the 200,000 would be just for the full-time employees
Okay,
incentive.
so then a business could get 200,000 plus $1 million.
Yeah, they can get 1.2 million, if they maxed out both, correct.
Is that clear to everybody?
And so I had a question too, when I was talking about this, and I asked, the reason it works is because let's say you don't do capital investments, so it'd be zero, right? So you wouldn't get any incentive, it's 0%, $0. If you don't do the employee incentive.
No, I understand.
You just don't say and or in statute.
Yeah,
You know, so
right.
it's gotta
Oh,
be
yeah.
an and if it's not
Oh.
or.
No, I get the and or stuff
Yeah.
and I'm alert to it. No, what concerns me is I read that maximum total award of 200,000. So,
But that's for employees, so.
right, so maybe say total award for employees.
It does above it. It says multiple, this is the
Well,
employee one.
I think it could be more clear, but if
I think
you guys are fine.
I think it's good enough.
I think-
And really, and sorry, Senator.
No, I just think one's for employees and one's for capital investments, and that sort of says it, I thought.
Right, but when you say total, to me, that means total at the bottom line, so it's almost like it's subtotal,
With the maximum.
I-
but
Let me
if
think on
you
that.
all are.
Yeah.
When I'm back,
Yes,
I'll-
now, yes, now what do you think?
Alright,
I will spend the rest of my time thinking about that, but it's a good point.
I will just say philosophically, the consequential nature of words on crossover day, like less is more sometimes, because if we add a word and we're like, we didn't realize you're doing this or that, you know. that
No,
is
I
greater
understand.
consequence, especially if it's crossover and not, the end of session. We could keep noodling on that without adding a word that sort of messes everything up.
Okay,
Real quick,
Yeah.
so I'm gonna skip, there's no changes to the rest of this, the only change I made was, going back to statute on the award year periods, if you recall, because, we initially had a 3-year program, award program, we had to make changes to the other award years. I just removed that section because it's no longer being changed. So those award year changes are,
But it says at the
Can
end of the 3 years of the loan term. Is that still the correct language?
yeah, I'm hoping.
for the forgivable loan,
A
Correct.
forgivable loan is 3 years.
yes.
I thought we
That's
changed
it.
it to 5, right? I thought we changed it
We
to
changed,
5.
we moved
I thought we,
everything back to 5 years.
Why?
No,
Oh my
I don't think. we
they,
wanted
there was a
that.
change to the regular veggie to 3. And
Oh, I thought,
That-
I thought they were built on the same foundation of years, but
well, that was the change. They were gonna reduce the regular veggie to 3 years.
But
It's
this is
now up
3
to
years.
5.
okay.
And that I think just
I understand.
distracts from the real purpose of this bill.
okay,
But it's always,
so the loan,
it's
Well,
always
let's
been.
look at the highlighted language because I'm confused.
This was in the last version, 3 years, right?
Mhm.
Crossed out 5, made it 3. Y'all wanted to go back to 5. My understanding is this just applies to veggie, the traditional direct tax.
Okay.
Right.
But if that's not clear, then we need to eventually talk about that. Maybe you can.
Where, can you highlight where it says the 3 years?
Yeah, cut right here in that section where we are.
Where here? Or
Isn't that
where,
where we talked about the 3 years? I see the 3 years here.
shouldn't be in the definition section, it should be down in the forgivable loan.
We're still in definition.
That part was in the definitions, I went back up to, yeah. I don't believe we spell out, here, we have, this is part I skipped through, but you do see that 3 years is peppered throughout the forgivable loan incentive.
Okay,
okay,
okay, great.
So we never say
Yeah,
subsection A, this is for 3 years, but it's
Mhm.
clear through language that this is a 3-year program.
okay.
Okay, so I need to run, but,
Yeah. Is that everything?
that's all the changes I made from the last version.
Okay, and
And you're
people
gonna
can
noodle.
look at the
I'm gonna noodle on the,
appropriation.
the max and total, or, oh yes, sorry,
Mhm.
appropriation, but that was there, I believe, in the,
Well, we
last
just never
version.
had a printed version.
yes. So here's real quick, section 3,
Mhm.
one-time appropriation. In fiscal year 2025, I'm on page 13. And in fiscal year 2025, the General Assembly shall appropriate $350,000 from the general fund to VEDA for the purpose of supporting the forgivable loan track program created in this act.
Okay. So before Rick leaves, have we given you any changes that?
This needs a change too, I'm sorry.
Okay.
This is the sunset. We want the sunsets, right?
We want the sunset to take place.
So-
fast.
Yeah, section 1, it was like.
We talked about some things we'll noodle on further. I don't wanna make those changes now and have a new draft come back. We don't have to vote right now, but we,
Today.
does
We have
anyone?
to vote today.
Well, we have to vote today, so the question is, do you wanna hear from all of our stakeholders after we vote? Or do you want,
I would say,
So-
Right sequence.
right, so are we asking Rick to come back at
Yeah.
11?
Yes, I don't
Okay.
already have.
I'll
Well, I
come
just
back
wanna make sure that's where everybody,
Because he has a new draft.
okay,
A few things need to be changed, so I'll.
Okay.
I thought I understood the 3-year, 5-year until we began discussing it, and I'm not sure that I fully understand that. So again, it's maybe something that,
I do
separately after
wonder,
we
where it
vote.
says award period, if you could say 5 years for this and 3 years for that, cause I think it's
there's a
confusing
lot of
That we-
clarity
that
when
we,
you get into
we
the
talk
subject.
about the award period and don't define it.
In one place, you talk about the initial 3 years as if, well, you can do this during the first 3 years of the program, and then leaves it silent as to whether the program continues. And this is for the forgivable loan program, and then elsewhere, it seems to make I think it would help us to have a little more precision relative to clarity. between the two things.
Joan, do you hear what we're saying?
Yeah, I
I mean,
hear
because I think Rick has active.
Yeah.
Time he's in another committee. He's
Yeah, I have to run, but
drafting.
what
Yeah.
we do need to do at one, because
Yeah.
especially the sunset needs to be,
Mhm.
corrected there. So I will email Magali.
You made a bunch of other changes. too.
Yeah.
So you're gonna look at that award period
Yep,
definition
yep.
and clarify, and then make those other
What
changes.
time do you all leave for the floor?
11:30.
Okay, I'll be back.
11:25. Okay,
Okay, all right.
thanks, Rick.
Yeah, thank
Thank
you.
you.
And you want really good news? my 200-page bill is the last one of 6 bills we're doing this morning. So I'm doing the most sleep-inducing bills of the session before lunch on Friday.
But you know, Anne, you're good
And
at,
it's raining.
you and Rachel are in the positions you're in because you moved efficiently through those things.
Yes, and if you add in the fact that
For
my
other
mom
reasons
over
too,
doesn't let me stand up for long periods of time.
Yes.
You could ask for permission to sit and for.
I will. But
If people have questions about pet insurance, so that's. Who wants to be in the witness chair? Cassie, why don't we have you in the witness chair first, just since, you know,
Did you?
we've been talking a lot about you and our you until now.
About your organization.
Can you take?
And people can take a break as needed. I'm probably gonna.
I emailed Stephen, but. Thank you for welcoming me here. I think I've
Just
addressed
reintroduce yourself.
Cassie Primus, Vermont Economic Development Authority CEO. So I am here to talk strictly about the forgivable loan piece, not about the rest of the BEPC changes. The forgivable loan piece, just to clarify, would be a program that would be funded by VITA money. It's not going to be funded by state or any other appropriations. So for those reasons, we want to retain the right and ability to make those loan decisions. It's putting VITA money at risk, but that's what we do every day.
Right.
And I also want to clarify that we do this every day, and our other loan programs have basically same missions. We make loans to create jobs and make capital investments for businesses to grow. And so there is the potential of overlap here between the programs and some potential for confusion in the marketplace. For that reason, I strongly urge that it be BEPC that is the face of the program, including the forgivable loan program. That VITA is behind the scenes on this.
You're the underwriter.
We're the underwriter. I could liken it to how we handle some of the other programs we do for drinking water, clean water, for state agencies, brownfields loan programs, where we're the underwriter. In those programs, however, it's not VITA money. So in this
Okay.
case, it's VITA money that's at risk.
Okay.
But because of the overlap, I feel it's important that it's BEPC that's the face of this, and
Mhm.
BEPC is making all the eligibility decisions, including the FUD4. That's
Mhm.
very important. VITA is not involved in making any of the eligibility decisions. That is retained by BEPC.
So then when it gets to you, what's the criteria layered on top of their eligibility decision that you
It's the financial criteria. So can the business repay that incentive,
Mhm.
the loan amount, through existing or projected cash flow? So that's what we're good at. We do
Right.
that.
You are good at it. So we're grateful that you wanna help
That
this
is good.
program.
That is what we do. And so that's, as I say, the FUD4 needs to be retained by BEPC because we get applications every single day that somebody could look at and say, well, they could, get a forgivable loan, which is a grant wrapped up as a loan. And that's not going to be on us. It cannot be on us to make that recommendation that business get a grant instead of getting a loan.
Yes. Senator Cummings, did you have a?
No, I'm just reading the definitions, and it says award period means the consecutive 5 years during which a business may apply for an incentive under this subchapter. Is that regular veggie, and why?
We're gonna work on that definition.
Yeah, because
If all of us were confused that, because there's nowhere that it starts out by saying this one's 5 years, this one's 3 years. It just assumes that throughout the rest of the language. So we are going to separate those.
There is one place where it defines qualifying business
Right.
as being one that's eligible for the forgivable loan because it has 50 or
Yeah.
fewer employees.
But it doesn't
That
take
would
3
be
years.
built out
Exactly. Yeah.
throughout. like
Yeah.
referring it as a qualifying
Mhm.
business when you're talking about the forgivable loan program.
So we should just. email
Which
them.
still is a little confusing, right?
Yeah, and
They both qualify just for any
I
program.
Yeah, it could be better.
think
Yeah.
that it's really important that we do something with sunset, and I anticipate we'll get it, you know, a sunset.
The house is going to have a sunset.
Well,
and-
before we get it off the floor here, I
Yeah.
wouldn't be surprised to see a number be.
Oh, yeah, something's coming out
Be-
of Commerce and Ways and Means.
But you mean in the Senate, that there
On
will
the
be an
Senate
amendment?
floor, I would not
Yeah.
be surprised to see an amendment
Yeah,
to limit,
Yeah.
you know, to put a sunset back in,
Right,
just
right.
because
Yeah.
it's always happened. So think we need to be really clear
yes.
that this is a new program, that this new program works this way,
Mhm.
and that it doesn't, we don't get into the weeds with how the other
Mhm.
programs work, and
Right. And I think I know I can do this. I think we'll all be supporting each other on the floor. I think we can effectively argue that it's even harder for a small business to take advantage of this program if there's a 2-year sunset on it. This is still a relatively small amount of money for a business that doesn't have a lot of HR staff. Oh, you have to fight for this every year in the legislature also. You know, the companies that have had this up until now have a government affairs person. They still find it annoying and challenging. So I am prepared to argue on the floor that a sunset plus trying to finally help our small businesses through this program is a recipe for a lack of use.
we've argued that for years. I think
right.
just the clearer we get
Yes,
that this is a
Understood.
separate program,
exactly, yeah,
has nothing to do with regular
Right.
veggie.
yeah.
This is.
Baby veggies.
So, given
I don't
our
know what
timeframe,
kind.
I'm happy to email Rick. In the 2 sections that we want that clarity, I would propose that we want that clarity in, under the definitions under, 331. One, award period, I would clarify, and for the forgivable loan program, 3 years. And on page 4, under qualifying businesses and for forgivable loans, in addition to the 50 fewer, it's also for 3 years.
Yeah, I don't know why the definition in there for 5-year I don't know why that definition is in there, because there's nothing to do with 5 years in the loan program.
Well, yeah, if I could just say, I think it's because he was adjusting the existing veggie statute, because originally we had put in going from 5 to 3. So that's
Yes.
why it's still here.
So maybe we can take it out, is Ann's point.
Well, typically, when you're adjusting a program, even though we're adding this option, we'll call it an option, they typically amend the existing statute, and that's why it feels.
But we're not
It's hard
changing
now.
the existing statute, so if we don't do anything, it remains as it is, which is 5 years. And we don't have to say anything about 5 years, because that just confuses.
Yes, to go to Ann's point, we could pull all the discussion about
Unchanged.
original veggie
Right.
and just talk about the new forgivable loan program.
That would be,
Yeah.
it would, that might be a bigger change for Rick to accomplish in 15 minutes than to just make the definitions clearer for both.
Yeah.
I mean,
If he were to pull all the language, we might lose something important.
what else are we doing in here that has regular veggie in it?
Well, that's the thing. I think like one thing, I think something.
No, other than that, we're not changing it.
No.
So I would just
originally
take
said
that
that-
definition out,
I'm
and
worried
then
we're gonna
stay at
strike
5
something.
years,
Okay.
I think,
until we vote.
Why don't you tell him he has
Yeah,
2 options? To really to ratify the definitions of both, or to take out everything related to.
do you want, Joni, to email you that?
No, I'm just looking at the existing, I'm trying to think about.
Yeah, let's give Joan this responsibility if that's
Yeah,
okay,
he-
to look right
Yeah.
now.
I mean,
When you
basically,
want copies.
he wrote, for purposes of the loan incentive, a qualifying business that maintains the same number of full-time employees on its payroll throughout the term of the loan agreement.
I
Yeah.
think he made it pretty clear that it would be hard for him to put this in the same subchapter and not have the existing language
Correct.
as a kind of
Correct.
skeleton.
Like it
So-
can't just be on its own because it is still abiding by all the
Exactly.
veggie rules. And
Exactly.
so it's just that if the business is a qualifying business, it goes on this
Yeah.
forgivable loan trap.
Right, I'm gonna go ahead and say we just need to make the definitions clear, and that's probably the best we can do. An hour.
I mean, I would just take out that definition that says 5 years. Because we.
But I think what we could
haven't
do is
changed
say,
it, so it still is 5.
right. Well, we are, unless we do something else, we're leaving the new program at 3 years.
Yes. And we're doing the new program, and it's a 3-year program. So to put in the timeframe is 5 years, which is for another program.
Yes.
Just confuses people and will cause discussion on the floor.
Right,
about
but
something that's
he
totally
can't kind of omit one sentence in the middle of existing language that's being edited. He can only edit it further.
And one thought, when you
Yeah,
decided to go back to the 5-year for original veggie, I thought you were also making that change
so did
for
I.
the loan program.
So did I. I
And
wasn't
we're
gonna
okay
bring
with
that up,
that.
but that's why I thought when we saw
Yeah.
3-year again, I thought everything was 5 years.
Right, I think it would be easier to do that
Yes.
and have up to 5 as
Yeah,
opposed, right?
yeah.
So maybe we'll just tell,
Remember people,
Let
we said we
yeah.
could do this, can we
Yeah.
just,
Yeah.
yeah,
yes,
So,
will you email that to Rick?
I will email
Okay,
that
thank
to Rick
you.
now.
everything.
Thank you. So up to 5 years
for both.
for both. And if people have a further concern, that can be dealt with in the house, but I think that makes it much clearer,
That
that
makes
like.
it clearer and
3 year,
I,
5 year. Yeah,
need
Yeah.
to make the decision is
yeah.
maybe we try them out for
Right.
1 year.
No, I'm glad you kept chipping away at this because I wasn't gonna say it, but that's why I was surprised to see 3 years at the end. I just thought everything affected 5 years.
Good.
Glad we're all,
Good
As far as I'm concerned.
yeah,
Yeah, and
Great.
this is confusing enough, and the easier you could present it on the floor.
absolutely. You know better than anyone probably.
I just present things that nobody understands.
Right.
I didn't get questions on pet insurance today, that is the only question. Yeah.
Just simply attach this to the update bill. for
I know, right?
Yeah, right.
Ignore
There we
that.
go.
It's funny.
No, this will have its own day on the floor, which is why, because it's gonna then go through at least appropriations and come out on a day when
Yeah.
people will be paying attention. Okay,
Up to our keywords, and I
yeah,
support that, yeah. No, it's less. And that, speaking of timeframes too, and I didn't raise this earlier, it's not super material, but for instance, the forgivable loan, it does say paying interest for 3 years.
He'll
But
change everything to 5.
We know tax is gonna take 18 months or so
Right.
to make a decision.
right.
He's gonna want interest during that whole time
Yeah.
period.
So should we say for the award period?
For
Like,
the-
why did we go through all this trouble of defining award
A
period?
couple of
Yeah.
things, we spoke to tax, because tax doesn't have to do claims every single year on this.
Uh-huh,
It's gonna make their burden much easier.
okay.
And so I don't think it's going to be 18 months,
Okay.
for this program, it is simplified,
Mhm.
that's one thing, and the other is, should then say, instead of 3-year or 5-year, just say, until forgiven, in other words, you're gonna pay interest on the loan until it's forgiven.
Yeah.
And there's a process for that, so
Mhm.
we allow
We
for.
do need to make the amount of the loan back.
That we need
Right.
to communicate.
Hey, are you adding that, Joe?
Yes,
Okay, great.
And I know at the risk of throwing a monkey wrench into all of this, which I don't wanna do, but that process of no decision is made until the end of it, it could be enhanced by, having partial forgiveness, and the language in here already exists for that, except that it's not incentive, it's partial forgiveness, but that may be a future version down the road. Because I do feel like
That might be too
would
much
be
for right now.
important
Yeah.
to really.
I think that's a house, but
I think it's fair for you to get it on the record, so we hear what you're saying.
Right.
and for,
And if the house comes back with it, then we'll.
Exactly, we'll understand, I don't know.
Um,
so And finish your concerns, because then I'd like to ask you sort of your
Yeah.
feeling about this program and its value.
Yeah, sure, and I want to get there because I want to end on a good note, let's see. I believe that covers my main concerns, and that concerns is a strong word, but because these are all things that can be addressed, they can be addressed. What I do, like about the program is it does get the money up front, and for a small business that typically does not have the internally generated working capital to grow. And so it's either they've got to borrow from friends and family or borrow from a bank or other institutions or from Vita. This is a nice option to provide a little bit of support. For the payroll piece, it's gonna be small amounts because $5,000 per job. So we're looking at potentially some very small loans. I would encourage Repsy probably to come up with some processes that make it easier on the sort of the Vepsi side to qualify for a $50,000 loan, because that's gonna be the size of these loans. The capital investment piece, I think is easier. It's a great tool on the capital investment side. And it's something that we do every day. We can actually go out and see if that building was built or that
Yeah.
machine was purchased.
More tangible.
Right, and it's gonna be in a shorter time period than 5 years. So it's a great tool. So
Talking about a shorter time period with the loans, anyway, we're talking about a 3-year ideal.
Right, so the up to is key, so, to have something that is a small loan, it could be a $10,000 loan, there's no minimum in here.
Right.
So you wanna kind of keep that short. The other thing that is good about this is that somebody will know, the business owner, the applicant will know how much they can qualify for on this forgivable loan piece before even submitting the paperwork. And they can make that decision at that point in time, whether it's worth it or not. They will incur costs. This is gonna be interest bearing. It's going to be, at market rates. There will be reporting, et cetera. So, it's not a complete freebie. And when that loan is forgiven, the interest is not forgiven. It's just the principal that's forgiven.
On the other hand, they've had the cash to play.
They have had the cash, exactly.
The cash to grow it,
And that
cash to
would be
grow.
huge.
Maybe that's how we can retitle it.
And it's kind of like veggie, same idea. Can I ask a question about how does this fit in with your other notes or your other programs?
Yeah.
Is there a niche?
Yeah, so as I say, there is the potential for sort of conflict or competition where we could underwrite an application that comes to Vita and they can support the full amount of that need. Say they need, $500,000 to either make a capital investment or permanent working capital for growth, payroll and operating costs. And we'll underwrite that and they won't get a forgivable loan piece. They won't get this, grant that's wrapped up as a loan. So the niche may be that, there's say a capital investment program, project. And the applicant might not have enough equity, to meet, for Vita, it's only 10% equity. For a traditional loan, it's gonna be more 20, 25, 30%, depending on various factors. So if the business does not have that equity to put into a project, and this is the only way that project is going to work, then that's a good fit. But that's why the but for needs to be made by the council.
Good. It's helpful, thank you.
Are we at the end of your concern?
No, she talked about what she felt good about.
Oh, yay,
And-
concerns and optimistic
Yeah,
Well,
feeling.
the good, gets money up front, and small businesses don't. Don't have the cash to grow, will have the cash to grow.
Yeah.
Yeah,
yeah, I mean, that is a real concern. I mean, the larger businesses, obviously, they have some cash because they're not getting the incentive until after they perform.
Mm-hmm. Yeah.
But they've got more
Right.
resources there.
So,
small
can I-
business
I don't know if I missed this, can I clarify something? You are underwriting, are they still eligible for other VITA loans while being eligible for this?
Yes.
Okay.
Yeah, so it's, we
Yeah.
can
Mhm.
partner up, and if it's, less than 350, we have tools and other programs where if they can't get that financing, you can do it without the bank,
Mhm.
because typically you need a bank involved.
Yeah, and
or
Yeah.
credit union and other.
the only material change we were making to both programs beyond creating one is this idea of employee and cooperatively owned businesses. Is that something you're okay with,
Mhm.
an enhancement?
Yeah,
And that's pretty much coming from
That's
the
not-
council, I think.
Yeah,
Yeah.
that's not the loan.
Yeah. yeah.
But you
Yeah,
you don't see a
that's-
problem with underwriting a loan for the
No,
business?
no, to a business that is employee owned
Or
or cooperative,
cooperatives.
yeah, no, those are eligible,
Okay.
These are all
Today.
eligible entities.
Mhm.
yeah,
Like a food co-op is eligible. Okay, great.
Or like Chroma.
Yeah.
Chroma is employee.
Yeah, well,
We have a
employee
lot of-
versus like a member
But
owned
it's bigger.
business. Employee owned seems easier for me to fit in this category. I wanted to make sure cooperatively owned, like member owned grocery stores.
Oh, okay,
You know,
okay.
if we're saying cooperatively owned too, we're just, that fits the business model, right?
right, yeah, no, those are eligible for VITA programs,
Mhm.
so I would imagine that's a.
Not necessarily for Pepsi, because we have that limited local market issue, like it's only
Okay.
for tradable, exportable sectors. So it's mainly manufacturing technology.
Okay, so
Yeah.
employee owned is gonna be more eligible there,
Yeah, it would be more eligible,
but we can.
depending on the sector, depending on, making sure
Yeah.
that it's not a limited local market.
Okay.
The other thing that I just wanna point out, it does not need, it should not be in statute, but when we do our underwriting, we are treating this as a loan. And so we will be asking for security and personal guarantees. And that helps to ensure that, yes, this is a loan and it needs to be repaid, and if not, we can foreclose on the collateral or the personal guarantees.
Mhm. And in missing some of your piece about the value of this, it has been raised on the House side that they see more value in the employee growth piece than a small business, getting a forgivable loan for $1 million capital investment. Do you have any feelings about the both and of those opportunities for smaller businesses? You might be asked to defend that on the House side, so I'm just trying to prepare us for those conversations
Yeah.
as well.
So it's probably easier to get a traditional loan on a capital investment because you have that hard asset. So I think making the but-for decision becomes a bit more complicated. Versus funding the growth of working capital, basically is permanent working capital that
Yeah.
is what we're talking about, the employee base of operational overhead. That's a more challenging piece to finance. It is done all the time. Banks do it all the time. We do it, but you might not have as good
Right,
sort of overall credit
yes,
profile
okay,
because maybe collateral isn't available or you're basing your loan decision purely on projections.
right.
So the credit risk is higher.
So you see no harm in leaving that option available. There's probably just gonna be less small businesses that are able to meet the eligibility criteria for a forgivable loan for a capital investment. And Joan, you can answer this
Yeah.
too. We're just gonna have to
Yeah, I would
discuss
just
it
say,
with the House.
yeah, I know that they had concerns, but I think
Yeah.
in this high-cost construction environment,
Yeah, yeah.
there are gaps with construction that we're
Totally.
hearing about all the time, and so I do think that it's important to have that as either or. Additionally, because there's such a hard time finding employees,
Yes.
that some are buying robotics and different types of
Yes.
machinery that's gonna ensure that they stay here. These are not things that you just move around. They're huge
Right,
machinery and equipment that I do think it would be
right.
important to have the ability to do only that if they're not growing their employees.
Yeah, and I think that's, as to Senator Cummings' point, we're not just having this negotiation with the House, you know, other
Right.
people might ask us.
Of course,
You know,
yes.
are we really gonna give a small business $1 million capital or 20% of a
20% of their-
investment?
Yeah.
And I think these are helpful things
Yeah.
to keep in mind.
Well, a $5 million investment for a small business is.
Right.
Because a typical small business that we see here.
Mhm.
And I think in the future, we need to look at that Pepsi provision for regular Pepsi about increasing or maintaining employment. Because as you said, your labor market, there are
Right.
employees, and it may well be a better investment to put in some robotics, so,
And they are.
yeah.
You know, companies are, so.
Yeah.
So maintaining growth, but not necessarily employees.
Right, like I think in that regard, we would require them to maintain payroll. We don't want them laying people off because they got that, and what we've learned is
Exactly.
they're
So how do you
generally
balance?
not. Well, they're generally not doing that, it's just that people are doing different jobs, they're more sophisticated machinery, so.
They're running, you
It's
still
for
need somebody
training.
to run the robots.
That's
Oh,
right.
absolutely. Controlling Cal.
Yeah, you don't want now.
Any more questions specifically for
Just a
Peter?
question regarding.
Yeah. Oh, the chart.
That's Joe. That's Joe.
I wonder, that Golly could put the chart up here and I could be like, do the pointing and.
Yeah, well,
That would.
That's probably best, yeah.
Okay.
And I do have a question that's in color. Oh, yeah, go ahead. Yeah. Question,
But-
do
Yeah.
you want to do that?
Just a question, I would like to see, just a rough example of the mechanics of a loan. To one of these small business loans, both for payroll and for equipment. Just in terms of the flow of funds as to what has to be paid back when. Both in the case where there is a standard repayment period, what the amortization period. And then when what happens after the forgivable loan kicks in, if there's additional money owed.
You want me to verbally describe that? or
Well,
send you-
we did ask for some
If the
kind
chart
of
is
scenario
helpful,
presentation and
To use
finance.
that would be helpful, if
Yeah.
not verbally is fine.
Yeah, so a forgivable loan would be up for up to 20% of whatever the need is, right? So for the forgivable loan piece, it's going to be interest only during that period of
Let's
that
call
they
it
have
3
to-
years
the
for that.
performance period.
Mhm.
At the end of that performance period, a determination is made
Mhm.
by tax or us that they met the criteria. So at that point, if they met it, it's forgiven. There's no more repayment. It's done. Actually, Vita,
There's no
Needs to
more
get-
repayment of the part, the 20%.
right, the principal, the 20% is forgiven.
Mhm.
Vita will get repaid by the tax department.
Mhm.
And you'll get the interest,
Well, the interest was
The
paid all
interest is
along
repaid.
by the
For
business
this,
but to you,
to us,
Yeah.
right, so you'll get
And
the
you keep
interest.
Right, the interest is paid monthly during the performance period.
So where does the tax department get the money to repay the loan?
From our 350,000.
No, not
No.
from 350, it's from the general,
Guarantee.
That's, yeah.
That's the loan loss reserves.
Joe
Yeah,
could tell us.
so it's where so currently in Veggie,
Yeah.
they take it and they give it to the business from their withholding account,
Right,
they
well,
just do
that's
that,
it. The business has been paying into tax gives
Correct.
back what they.
same idea.
Mhm.
Except in this case, and I'll take you through the whole flow chart, because I do realize it's busy, that tax would then repay. So if we start at the top, right, and we do have an example here of a business that comes in, they talk to Jessica and say, I'm, 20 employees, whatever, and I'm going to hire, maybe that's not a good example, I'm 40 employees, and I'm gonna hire 20 new employees over the next couple of years. I'm making $1.5 million worth of machinery and investment, and I plan to do a facility investment of $3 million. So when we do the calculation, it means that 20 new jobs at $5,000 per new eligible employee. Again, the eligibility is based on the wage threshold. That's $100,000 of forgivable loan. 20% of this capital investment is $300,000 of forgivable loan. And the facility improvement would represent 20% of 3 million, that's 600,000 of forgivable loan. In total, 1 million of forgivable loan.
Now.
So
let me just
veggie,
stop for a
ahead.
second and ask a question. If there's not an assumption, is there, that the only money that a business might need to do any of these things, particularly equipment purchase, is going to be provided in total by the arrangements with Vita? You know, you've only got, for example, the capital, we've only accounted for 20% of it. So the
correct.
question is, where's the 80% coming from, and what is the financial burden, if any, in terms of ultimate payout? Or do we say, that's none of our business because we're only concerned with that portion that's forgivable?
So typically, right now in veggie, we don't even look at that, right? But because Vita is involved, you'll probably look at their other sources.
Right.
To look
Because we
whether or
wanna
not
make
it makes
sure.
sense from a loan standpoint
Right,
as to
right.
whether or not they're able to carry the debt.
And they carry the debt, will the capital investment happen? That's the big
Right.
issue.
Now,
So that's
the
the,
assumption here that Vita is not going to be involved in any other part of the funding for these deals. Is that the assumption?
No,
not necessarily.
we could be,
It could
so
be.
it could be Vita, it could be
Other
other
banks.
equity, it could be other
It could
traditional.
be a
lenders.
brownfield loan.
Mhm.
Yeah. We do
And those
that on
loans are
every-
likely to be relatively long-term in terms of payout.
It depends.
Yeah, but that is not a concern here. You're solely concerned with that portion that is a grant to help them get to the point that they can hire the people and continue,
Correct.
or to be able to purchase that portion of the equipment that the 20%
Well, in
possesses.
our underwriting, when we crunch all those numbers, we, Vita, will be concerned about all of that.
Okay.
Right.
In
and
terms
you'll
of
be
whether the
treating it
loan
as a
makes
loan.
sense to make.
Yeah.
Not a grant until it
It's a loan.
Yeah.
All right, so they come in, they present this as a proposal.
And it's 3-year, not 5-year.
It's
Up
up
to
So we just said we're gonna
5.
change everything to 5, right? So that's what we had thought about last night, that you would change
Right.
everything to 5, so we have that up to 5. So Jessica takes this in, she's like, great, they qualify for veggie and they qualify for the Vita forgivable loan. It goes to Vita, they do their underwriting. In this scenario, we're saying they approve the loan, right? If they don't approve the loan, they would get back to Vepsi and Vepsi would take them through classic veggie, right? But in this case, they approve the loan, the Vepsi council meets and they authorize the company. They've looked at the but for all the other things.
Mhm.
They authorize it. Vita issues the loan, that means there's a loan agreement in place with the terms, the interest rate, all of the details. And now the company does this project as proposed, and in the interim, the company pays Vita interest on this $1 million loan for 5 years, right? They do the activity, let me switch sides, and now the company's gonna come in and claim that the targets are met and they request the loan forgiveness. Vita has to verify that all this construction and equipment took place is what they normally do. Yes, then it goes on to Department of Taxes to verify the payroll and the new employee targets. If they're met, then tax sends Vita the $1 million to repay the principal of the loan. If not, if Vita verifies that, nope, they didn't complete this, it's a no. Project, that loan, that is still a loan. And I don't know whether you roll it into a different loan or what you do, but it's gonna become a conventional loan. So for any one of these, if they're not met, it stays a loan. It's only if all of the things they promised come through that it'll be forgiven. If the targets are not met, it becomes a loan. And then after all this period of time, I don't know, maybe 6 years, 7 years, it becomes a dodgy loan. Sorry for that very colloquial expression. Then that's why there's a $350,000 loan loss reserve, which is the appropriation to help Vita
Carry the risk.
do allowance for possible losses.
I have to say, it's by Tuesday or whenever this goes to finance and appropriations. If this might be helpful on the floor, it's just making me nauseous to look at right now, the way it is drafted. If you
Okay.
have someone on your team
That's
who
why
We could get rid of like a
Do
lot more
something,
detail.
yeah.
We did this because you wanted an
Yes.
example, so we did an
Right.
example embedded into it.
Right.
And also currently on the veggie website, there is a even busier version of this for
Yes.
current veggie. If you look at both of them together, you
Right.
see this one is a little bit more simple, but I
Yeah.
take your point. We could further simplify it.
the thing that I'm still not clear on, and if you're forgiving the loan, Vita has to borrow the money to make that loan. They have to have that money to pay it back.
Mhm.
I understand Vita's getting interest, but I doubt that's going to qualify for the principal. Where, and you say the tax department will pay back. Where is the tax department getting the money from to pay back Vita?
It's the same principle as where do they get the money from now to pay the
Well,
applicant?
that's
From the new employee.
From the new employees, from the CapEx, from the
so,
Sales and
right, but
use, but,
that's,
yeah.
we
What's in the
collect,
black box that
we
says that.
collect that money. Under present veggie, you don't get paid out until your fifth year, so you've been paying these taxes in.
right.
We give them back to you. These, if I'm getting a forgivable loan, what taxes am I paying in? Because the other day I understood you to say it's the taxes the new employees are paying.
Right.
Yeah,
So
so they're still
they're-
paying in taxes.
They're still paying in
They're still
taxes.
growing.
Sorry.
Vita is funding it from our money upfront. And then there's the performance period during which they're paying their taxes as they're growing and making investment, they're paying that to the tax department.
And so that,
So it's similar
It's the
concept.
same flow, yeah.
The tax
how
department
does
is
that
monitoring
work
their
with
growth.
equipment? How does that work with equipment? You're just making a capital improvement.
Well, I mean,
You're
for
gonna pay more
property,
taxes.
if they're expanding, there's gonna be additional property taxes. If there's new employees, the
But
assumption
the
is.
property taxes don't go to you, property taxes go down to the ed fund.
But the income tax does.
Yeah, I mean,
Okay,
it's
But you know,
totality,
income
like,
tax new equipment. If you're just putting in new
Yeah.
equipment,
right,
Where's the income?
Yeah, I see your question.
where's the income?
right. I mean, I think that this is how current veggie is built. They take this into consideration and there are assumptions about for each new, in fact, capital investment only in facility expansion, I think weighs a little bit more than just machinery, you know? But the assumption is that with new employees spending money, it's an assumption of across the board, not just
Right,
income
but-
tax, not
That
just
was
payroll.
done, essentially to calculate the value of each kind of addition.
Right,
And, you know, that's the thing that particularly by Hopper, for example, and has been one of the big questions, if it goes in the black box, but, you know, there's a lack of comfort that he has regarding that, as well as whether or not it in fact motivates any increase that would not otherwise have occurred because of concerns about the but for. But here, just in going through the calculation, let's say a piece of the equipment is a truck.
no, yeah, it wouldn't be, it would have to be a
It
fixed,
would have to be a
it's a
fixed
fixed asset,
asset.
yeah, no, it can't.
So you have a
can't do mobile
machine,
stuff.
and the question is, how do you know that the machine has improved your productivity and your profit margin? Now, I don't know if, you know, it may be that the black box, even for the small business program, has been accommodated, changed to accommodate that logic. Has there been any addition or changes made to?
No, this is kind of, since the black box has so many questions about the assumptions and whether or not it really
Yeah,
ending up, we are basing this on traditional programs that we've had, like the $5,000 for a remote worker. We've done the 20% of CapEx or $1 million for the community recovery. It's like, we're not funding the entire thing.
But
And the black box would actually gives out 80% of the net fiscal impact. So we are being, you know, a bit more conservative here in this, and it's also simple for people to understand.
But what I'm struggling with, and I'm a true believer, like the Kool-Aid, I believe that you should help businesses move. I understand with traditional veggie, they're paying taxes in. They meet their goals, you give them back the money they've paid in essentially over that 5-year period. With this, we're giving them money. and they're not necessarily paying in.
That part, you lose me on that part,
Okay,
because I'm thinking that it's still, like, let's say this entity got regular veggie. So in regular veggie, it's the same idea, they're paying tax the way they're paying tax, it has nothing to do with veggie, right? They're just,
Right.
they're producing, they're hiring people, you know, they're doing what they do. Tax just verifies the number of employees in the payroll, they're not analyzing how much tax came in from that particular employer and do they deserve this? It's really just about the targets, right? And so that's what they pay it out. And so this is equivalent to that. They're not assessing, oh, how much came in from this employer? How much did these
Okay,
employees spend, you know?
So it is a leap of faith.
It is.
That they have paid in essentially the amount into the state coffers that we are giving them out in a grant. Caution
Overall,
you to
it's not
make
a
sure
leap of
that
faith.
that works.
I mean, so per transaction, every loan has some piece that's a
Right.
leap of faith. But overall, the program has demonstrated that it has added
Right.
new growth.
So, yeah, I think
Tax
the
growth.
difference is, right, the state in this scenario is not giving out any money. First, on year 0, year 1, year 2, year 3, year 4, year 5. No money from the state is going out, right? They
And
only get the forgiveness at the end of the 5 years, when they've met the targets, they've created the 20 jobs,
That's under regular veggie.
no, this is this. They
How
don't
do you
get,
not give, how do you give them a loan and not give them any money?
it's not state money, it's money that Vita borrows.
Right, okay, but, and
Wasn't
we're
that the
gonna
original
pay
question?
Vita back, the risk is that they won't have produced enough tax income to cover the loan. So if that happens, then I assume Veggie's got some money up there somewhere you can fill it in with. But if that becomes a regular thing, you can't afford to be siphoning in, you know, you may get 350,000 this year,
Yeah, I mean,
but you won't get it
yeah.
again if this isn't working.
Yeah, I mean, I think that, yeah, I mean, it's a fair point. I think what this does, that regular veggie does not do, is the ultimate maximum somebody can get under this is 1.2, no matter how many employees they create, no matter how much capital investment. And when we did a look back and we saw the existing active veggies, some people got more, some people got less under the new scenario, but in total, we were being more conservative with state funds in this way. So that's why we feel like this could help the business. It simplifies it a bit. And we have the security, you know, Vita is gonna do its due diligence.
Right.
And again, it's only 20% of their CapEx, so it's not like giving them 80% of their project. Right,
Right,
which is-
no, but I think Vita needs an absolute guarantee that it's going to get the amount of the loan back, the principal.
Right, because it is a revolving.
Because
Right.
And you're gonna have to watch this really closely. Because 350,000 isn't that much if you're making $1 million loan.
But they have 5 years to meet their target, so we're thinking that's gonna kind of sit there for a while, right?
Right, but I'm
So-
saying that you have got to be very careful in this. Because to make sure that that loan is covered by the tax department.
Yeah,
Because it's only gonna take one failure.
Yeah, and this basically is dependent upon really the examination that's done in the application process by the Vita board, because this isn't something that we're looking.
Not the Vita
It's not the Vita board, excuse me, the
That's-
Betsy board. We're not looking for the Vita
Council.
board to do an analysis that the tax department is going to receive a certain amount of revenue from the number of employees that are hired. That is outside the scope of what they do. It is the assumptions that are made by the Betsy board when it says this project is going to hire these employees, but I don't think the Betsy board goes outside of what's going on in the black box to say, does this make sense? Are these employees going to create the amount of money necessary to pay off the amount of money that we've given the company? I don't think you guys are doing that at this point.
Gotta be
It's
careful.
been doing me.
I think you're relying on what's in the black box, and that has been one of the questions, for example, that the auditor has been, it's not an unreasonable question, asking, are we comfortable that in fact is happening?
So that is all dictated by statute, that black box is used and that it's approved by JFC and you know what I mean? So like, I don't think we're gonna,
Right, so sorry, is Jessica here?
yeah, she's online, but you can't see her.
Yeah, no, I just mean like, is she?
I'm right here.
Hello,
Yeah.
Jessica. Hi.
I'm here.
What
Hi.
I think is, so. I worry that even if we're like, oh, the Vita board and the Pepsi and what, like. If you wanna be the underwriter and not the face of this, I think we're gonna need to have Jessica be more of the spokesperson for this. I don't wanna talk about you as though you're not here, Jessica, but
I'm
we're,
here.
like, we need you to be the face of Pepsi now, and I think that's one, and then another
That's
thing,
understood,
Joe,
yeah.
you're carrying something between a huge transition and lots of new staff. It's just. This, like, at the center of this is Vita, and if we take this to the floor,
Mhm.
people are gonna get confused. That Vita is making the major decisions, which they're underwriting, and those are major
Mhm.
decisions.
Yes.
But, Pepsi's the buck stop there for the but for, and for holding this risk and staking their reputation on, like, we're bringing in more money to the
Just
state than
calculating the
we're.
amount of money that's the return on
Yes.
the investment.
Yeah.
That's what's being done there.
Yeah,
And, there's always, where there have been questions raised in the past, it's always been, well, what the hell's the black box do? And
mhm,
why do we have confidence that their projections as to what that, and having a good example of what that really means,
yeah,
Visually, of course, would be helpful. That I think would be very helpful at this point.
Right.
I think, yeah, the black box should probably be presented by Jeff Carr. Cause they're the ones who kind of created.
I don't even wanna talk about the black box.
right,
I mean, the but for, I have very mixed feelings on but fors. But the important thing is now, we don't give money back in regular budget till they paid it in. This time we're giving money out, they get it up front. And we can't afford a black box. We have to make sure that whoever we're giving the loan to, and then forgiving, that they are paying enough taxes into the tax department to cover the loan, the principal of the loan. Because if they don't,
So that would be a
the tax
departure.
department taking my taxes, and I think that is objective.
So that would be a departure from the way veggie is currently handled,
Yes,
so.
and that's, you're gonna
I
have.
don't think you're gonna sell that with an attached to this bill and have some separate methodology that we haven't discussed and we haven't
Right.
vetted.
Right,
But we currently have an appropriation that goes to veggie.
but
That,
that's just.
That's
We don't have an
loss.
appropriation.
So
The
you have
appropriation-
one loss, but you're not gonna keep getting appropriations.
course.
You're gonna have,
Right.
Right.
you can't afford a failure.
let's have
Correct.
Jessica step in it.
So currently, I mean, I spoke to tax yesterday about this. And in speaking to tax, there's the structure of the award, and that's what VEPSI does. We approve the incentive amount, or we'll approve what Vita underwrites for a loan amount. And then it's up to tax, and this is a conversation that I need to have further with tax about how the payouts are paid. And I will tell you that tax told me yesterday that there has not been a single company since the inception of VEPSI that has incurred or that has received the total amount of incentive that VEPSI approved. Not one company in the history of the program.
Okay, but
And so that, I think, speaks to the strength of the program and the strength of the guardrails in the program. And I've also read, there was a 2016 report that was done that talked about the assumptions within the black box that you're talking about, and takes into consideration all of those. And it was, I believe, Jeff Carr, JFC,
It's been
and two
analyzed.
others. I can't,
But that's veggie.
Yeah, old veggie, right?
Okay,
that
Old
was
veggie.
this
old
is-
veggie, right? But for this program, I think you also have to understand that if you're giving these small businesses, as Cassie said, to give $1 million loan or $1.2 million loan to a business with under 50 employees, that's going to be the unicorn. That's not going to be the regular. You're looking at loans that are going to be probably more in tune to $10,000 to $50,000. And then that company is going to pay interest on that $10,000 to $50,000 for 5 years. And in that 5-year period, that business is going to pay payroll taxes in for those new employees that they're going to hire. They're going to pay sales and use taxes. They're going to be paying rooms and meals taxes, likely for the people that they're hiring that are
All the
out
assumptions.
eating, all of those assumptions, right? Transportation taxes, healthcare taxes. The business is going to pay additional unemployment taxes.
Their taxes to pay back loans. I mean, they're gonna pay things, but the tax department, healthcare taxes are dedicated, property taxes are
Right.
dedicated, sales
But-
taxes are dedicated.
Right.
Right now, they don't get the money back, and you say nobody gets the full amount, they get back what they paid in. Now you're giving them money. If you give them $10,000
Mhm.
and they pay in $9,000 to the tax department, where does the extra $1,000 to repay
So,
Vita come
If
from?
I could just, I think what's getting conflated a little bit is that in order to understand all the economic activity, it's not just what the employer is paying in, it would be
Right.
each of those employees, the new employee's income tax, as an example. In
Right.
order to track what you're doing, like what you were suggesting, which is an absolute, line for line, what you're suggesting is a big change, right? Because that's not how current veggie is done. And if we were to introduce that for this, in other words, we're saying that the risk is there with black box, the risk
But
is there
if-
with this, there's
If
risk.
tax doesn't get, right now, you only get back what you've paid in.
You get back 80% of
Okay.
the
But now I'm getting the money up front.
a loan. You're getting a loan.
You're getting a
but
loan.
It gets forgiven if I meet my goals.
Right.
But if I'm only contributing $9,000 new dollars to the tax department and Vita needs to get back 10, where does the tax department get that extra $1,000?
It'll come from the business because that $1,000 unfortunately will convert to an amortizing loan.
Loan.
Right. Will convert.
Okay, see, that is not written in here.
No,
And
yeah, I think we're confusing the things
Oh.
because I think what Senator Cummings is saying is, how do you know that the tax department wouldn't be overpaying somebody? And all I'm saying is, in order to prove that, it would have to be an comprehensive tracking of not just the employer, what they pay in on an annual
Right.
basis in taxes. It would be each of those employees, not just the new ones, but all of the employees, because there's, an element of retention that this company is still operating for the last 5 years. You would have to track each of those employees on what they spend in sales tax, meals and rooms. So it's a huge undertaking.
Well, and the part of that though is what, is my understanding, the black box was supposed to do in the
It
first
does.
place.
It
Because
does.
what it does, look at the amount of tax that the individual, the new employee is paying that we would not have had
It-
beforehand.
Correct,
It
But
does, but
secondly,
that's an
the
assumption.
increased productivity to the business that would come from
Yes.
expanding its workforce. All of that is what theoretically is in the black box.
It is, but it's based on assumptions. It's not a truing up, as I
Right,
think
correct.
what Senator Cummings is getting at.
But the tax department is very strict about honesty. And you have to trust when you pay your taxes in, that the tax department is using them for the you know, legally required purposes. If there's any indication that they might be taking $5 off of my taxes to make up the $1,000 that the business doesn't pay in, I think you've just got a different, you know, regular veggie, they pay in their taxes and then you give them back, but they put the money in first.
It's the same concept.
I think it's the.
It's the same
Yeah.
Same
concept.
Except that
concept.
they money first.
It's a,
And so
but it's a loan.
it's,
It's
but it
not state
gets-
money.
no,
Yeah.
it gets forgiven, and if it gets forgiven, if they meet their target
Correct.
of 50 new employees. But if those 50 new employees don't generate the additional state revenue to cover the loan, then you've
Well,
got a problem.
I think Senator Cummings, the other thing to consider here is that these are not just going to be minimum wage jobs. These are gonna be jobs that have to be at least 160% above. So that
I
income,
just think that we're trying to get rid of a sunset, and there's a good chance where it gets out of this building, we'll have another 1-year sunset.
So
There is a distrust, and if you want to keep trust, which is essential for the tax department or for a banking or loaning institution,
mhm,
you've got to have a good answer for, I get the loan, I get it forgiven, but it doesn't produce as much money as the loan.
can I make a suggestion? We have 25 minutes and we don't know when Rick is gonna walk through the door, but we have 25 minutes total. Tax is an unspoken stakeholder in this, and
Yes.
the oversight of how much tax revenue is coming in, for the payment that we've made is unspoken. So per its normal path, this bill would not get sent to finance. But I think we've all demonstrated there's enough of a nexus to make sure we understand how the loop works of, greater tax revenue to the state for the investments that we made, that we could, I believe, unless I'm incorrect, we could ask for this bill to be committed to Senate Finance and continue the conversation there. If we, from a economic perspective, believe this is a worthy program to consider, but we don't want to send it to the floor, not understanding the full tax implications.
It's not the tax implications, and I don't think finance can fix it. I don't think in a week.
I don't know about fix, but have a
There
better
is-
way of understanding
No,
it.
I think as it goes through, the onus is on Vita,
That's it.
Betsy.
veggie,
Yeah.
whoever. That they need to be able, I mean, we're trying to get away with any sunset. This program's been here for 20 years, I think. And is operated on a series of sunsets, which is a basic distrust. I think you need to be able to give a rational that people on the floor that consider this corporate welfare are going to understand that we are not risking having to put other people's taxpayer dollars into this. And you're a banking institution. I mean, you're a finance, you give money to people. They need to trust. And this is a different program. There's distrust with getting the money afterwards, to getting the money up front. I think you need to develop not a chart like that, but an ABCD kind of chart. And what happens? I mean, we're just assuming that if you produce 5 new employees, that those 5 new employees, because it would be impossible or virtually impossible to track it, are contributing more tax than the loan.
What we could do is we could run it through the model then.
That.
We could,
Do a
we could
scenario.
run it through it, we could run it through the model. So we have this formula, but we would ascertain that it has to be within the model outcome.
Yeah, and the point of the
This
model
way-
is there are lots of things in the model that are outside of the purview of the tax department.
Absolutely.
And
Yeah.
that's the point, not just the tax department, in effect, coming in and testifying that, yeah, for this 5,000, we got there's more to it. There is an assumption based on the economist's construction
Okay,
of this particular model. And
So-
that's what I think
Okay.
would need to be communicated.
So I'm for seeing a couple of things, and what I hear Senator Cummings asking for is that we not look at this and start the life cycle when the business is approved, but we say, you know, this much money exists within the program to loan out, to create forgivable loans in this way. And it's kind of like a TIF, you know, like we're looking at the whole pie and saying, well, I mean, it's kind of like visualizing a TIF, which we always have a hard time doing.
I love tips. I
You know,
love
but so right, we're lovers of this program who need to visually demonstrate to our colleagues that we get more of a return than we
Yeah,
put
Right,
in.
exactly.
That's
And that still in some ways underwrites this program.
okay, so I think,
And that's separate from running a scenario and saying, this is what a business would get.
well, no, in other words, require this formula to be put into the model. I don't
a
get it.
formula that, yeah, if you could do a formula in the model, I don't know if you can.
No, in other words,
That
we
says
did this
you're
formula.
going to generate X amount of money that would cover the loan.
We put this
I
in the
don't know
form,
if that's possible.
we put this formula and we say the maximum is 1.2. We run it to the model. If the model only says 500, it's the lesser up.
Okay.
Okay.
And that model is in the
It's in the
review
regular
process,
budget, regular budget.
but that's used in the review process.
Right.
Yeah.
But I think what people are asking is that we need help helping our colleagues visualize, here are the inputs. Here is the value they create, here are the
Well,
outputs.
that's the model.
That's
Right.
the cost
In other
benefit
words,
model.
Model that the model considers, for
Everything
example,
like,
in terms of
Yeah.
getting to its solution.
yeah,
And that the model would be used, the same model
the
that we
same
use
model that
now,
we use, yeah.
which is based on something designed by
Yes.
economists that has, you've got a proven track record based on what you're doing in the regular veggie program.
Yeah,
That is going to be used to evaluate by the VEPSI board in making its decision about approving the loans in the first place.
well,
And that is entirely separate
Yeah.
from what we're looking for VITA to do, because VITA is doing a very specific thing regarding approval based on the cash flow and so on of the business, which is different than saying what its ultimate economic impact is going to be and value to the state.
the reason why we didn't go to the model in this scenario is that smaller businesses that are, let's say, creating 2 jobs,
Mhm.
normally the model, the output is like minimal.
Mhm.
And then they don't go for it. So it kind of negates the original
Mhm.
impetus, which was to help small business. That's the caveat,
Do we
right?
really want to get down to the level of creating 2 jobs in my local general store?
Well, no,
Yes.
stores,
That's usually what stops people.
so general stores are usually not,
Yeah, they're not
but
veggie.
we're talking about like a
Sean
new
Lawson.
technology company,
All the
Sean
people
Lawson.
we heard from on Friday.
Right,
Like
it's
people
gonna
were
be
talking
hard for them
manufacturers
to commit
primarily.
to 20 new jobs, you know, so it might be a smaller job. Our experience with the model in doing capital investment program was, even though there were brilliant capital investments, like doing childcare or doing the NFI, the net fiscal impact, came out so small that you arguably were not really helping the project happen.
Yeah.
So it ends up being, the but for ends up being a bit more dodgy, because it's like,
Right.
really?
So all I'll say is
Can't
like,
do it for 30,000.
I don't, you know.
So,
I don't know who like the marketing people are within ACCD, but this just doesn't help us explain the program to people, and it's a good investment to give us that infographic and visualization, because we are not just convincing our colleagues here, we're working with the House on a very different starting place. And
Mhm.
this just isn't inspiring confidence. You know, and I'm sorry to insult whoever did this, but it's just, I know there's a lot of moving pieces. We just need to there are people who are good at infographics, and we need one of those people to help make this easier for us to move through.
ACCD
the
has
chapter.
that person.
right, and so we'll work on the infographic.
Yes,
What I wanna understand better is, are we at a situation where you want the model, or we're gonna go with the original formula, or are we redoing the entire way?
I have no idea what that question means, because I lost.
Just because
track
of all the discussion about,
Right,
I think,
you know, the
Right.
model has the assumptions, this one doesn't, this was meant to help small business, I just,
I think we need the help for small business, so I'm
Right.
actually I'm a supporter of this of this.
Yeah, and
option.
I don't like the black box conversation because especially for small businesses, you've set out the formula by which you are making this decision in the statutory language. We are not, our but for is not the same because we are not dealing with businesses that are threatening to leave or, and Vita is making sure that they can carry the loan and not go under.
Well, there is
So
the
we're-
but for, it does apply.
The but for applies
does
for their
apply.
growth, for their
The
growth.
but for is unless you give us this money,
Right.
then the activity that you're paying for this
Will not
will not
happen in
occur.
the same way.
Well, exactly.
So I don't want us to hamstring our local businesses to not be able to
Yeah,
participate.
in the same
way.
But the
in the same
but for is not the restriction here. What the restriction here is, are we gonna get enough out of it essentially to
Right.
pay for it?
And
what
that's
it
not
is.
a black box.
That's
not a
where
black
I was
box.
going.
It could.
Are we gonna get enough back?
That's the question.
Because it's a
cover
forgivable
costs
loan,
of
it
the
is not
loan.
a black box, because they have to demonstrate that they have done all of that by the end of this to
You have
get
to
the loan
demonstrate that
forgiven.
they've hired the jobs.
No, they have more that they have to demonstrate from
But
Or
what
what the formula that's set out.
but before you pay the money in, you get the money back. This time,
Yes,
you're not,
this is not a
it's a
cash
whole
payment.
different calculation to say, and we really can't. I
Mhm.
hired 3 employees, well, they paid this much tax and this much tax. But what if all they paid was $9,000 and I got a $10,000 loan? You've got to be able to explain how you're going to ensure that it's gonna generate enough money to pay back the loan.
Yeah, are we getting, who asked that question, who distilled it? One of you three did, which is, are we getting enough are we getting out of this more than what we're putting in?
Are we
Yeah.
getting out enough, or are we getting out?
But I just wanna say, yes, we need to visualize that and we need you to show that. And that will need to be satisfied before their loan is forgiven. So that is to me not a black box where you're saying you met the black box test, here's money. It is, you have met this criteria over the next 3 to 5 years, and so your loan is forgiven.
Well, no, what you've done though, on the front end, what the VEPSI board has done is it's done its estimate that there will be an appropriate return in the event for each of these jobs that we have authorized. And so the test then becomes, at the end of the period, did you get the jobs? It's not that you go through a calculation at the end. of the
That's what I'm
period.
saying.
No, it has
It's
to be,
it's a beforehand.
It's a
part of the-
beforehand.
It's a,
the
as we
board
go.
is going to have.
And then if
to
you
do
don't
a better
ultimately
job
do
of
what you said, you
calculating.
don't get a
You
forgiven
don't get that
loan.
money, right?
Yeah,
Yeah.
And
yeah,
so
pay back
how
money.
you do the black box, quote unquote, whether you use the same black box, a new black box, or whether you do it on the back of an envelope, that to me is up to the VEPSI board.
right.
What we told the VEPSI board is there's gotta be an appropriate return in terms of defining what the objectives are that you are approving in terms of
Right.
their participation in the program. And that to me is a VEPSI board task.
But then demonstrating that they can carry the risk
Right,
is an underwriting process with Vita.
right.
And that's
We have
separate.
we've trusted with a lot of different loan programs and forgivable loans.
So why wouldn't we look at regular
In the-
VEP station advance?
Well, you use, that's what you do in advance. That's part of what you do.
Yeah,
That's what you do.
No.
That's the board.
Right.
and that's where there is a lack of trust. The
Mhm.
board really needs to present themselves as a financially responsible. And we have 3 good years and then something hits the fan and
And that's where I
Okay.
think
You gotta
passing
be
the
careful.
repealed sunset with a program that works for our small businesses, which we should remember is like 90% of our businesses
Our
are
small
under 50
businesses need this.
people. Should help our colleagues say a forgivable loan program has more oversight and protections built in before these businesses get the money. And by the way, it's a vast majority of the businesses that we should be helping because they're not large businesses, they're businesses looking to grow and stay in Vermont. So
yes,
I would hope our colleagues can understand the marriage of repealing the sunset, but making this work for a vast majority of our businesses who've never been able to access this before.
that's a given. I wanna see it succeed. But in
Mhm.
order for it to succeed, the board is going to have to ensure that we are getting enough tax revenue, new tax revenue to cover the base of the loan. So that VITA, because if we aren't, then the solvency or the credibility of the tax department comes in. If they're paying out $9,000, but they're only getting 7,000 in. And this is a new program and it needs to be run in a professional manner.
When you calculate the tax revenue you're getting back, it's not solely the tax revenue from that particular job,
Right.
which is what the tax department has. There are other offshoots, and that is what is in the formula that the economists have done to create the so-called black box.
Right.
Okay, Rick, and we have 10 minutes.
Yeah.
Plenty of time.
And I
Cassie,
don't
do you
think
want
we
to say
should-
something?
Too much time.
Well, since Rick is in the chair,
Yeah.
I do, based on listening to this conversation, the way the draft is written right now, VITA has the authority to make the decision on forgiveness for the capital investment piece, but if this goes in the direction of the black box coming back into play, then we will need to change that.
No
VITA should not have the authority to make that rule forgiveness.
Right. This is not going in the direction of the black box coming back. I think a forgivable loan has a lot of checks and balances and oversight, and VITA being involved
Yeah.
should mean that after they meet the eligibility of they are going to grow more because we're giving them these dollars, you're then saying this is a risk that can be managed and mitigated.
And that's a bit dependent upon what the VEPC board does in approving the loan in the first place by saying that we have a basis for believing that there will be a return.
They're not.
But we don't do
approving the
that.
loan.
We're not gonna do that with this program. We're not gonna do that with the forgivable loan piece. The way the legislation is read now is that they're gonna create these jobs. They're gonna do the capital improvement. And what I understand based on the language in the statute is that the VEPC board is going to make a decision that but for this forgivable loan, the jobs and or the capital improvements would not have occurred or would occur in a different manner. And the different manner is what the council is going to consider. We're not going to do the tax analysis. That's not something that is part of
Going to
this.
the law, which is they are going to advance this
We're
application
going
to
to
VITA,
advance, that's right.
approve the loan.
So whose job is it to estimate or to decide if these jobs or capital improvements are done, that there will be enough new revenue to cover the principal of the loan? And that's whose job is it to do that? VITA can't do that.
Well, I think that's one of the criticisms of the whole black box program is that nobody can do that. That's an
No,
assumption.
except you get back the amount of money you've put in. Nobody,
No.
we've been told, get a award.
Only if
No.
you meet
They,
No, no,
They-
you don't.
Under the
It's not-
present program.
Under
And
the
you
present,
get,
yeah, I think what it is the tax claims that come in from the applicants
Yes.
each and every year. All tax is doing is verifying the head count, the payroll,
yeah,
and the CapEx. So they're not running through and saying, how much do we collect from this employee and that
No.
employee? And
but they have to
Right.
pay money in before they get money back. This time, they're getting money up
well,
front.
actually, there are some borrowers who didn't have a tax liability necessarily, right? So like, it's either they're
This
gonna
is where
get,
VITA gets in trouble in the legislature. It needs to be clear where the money is coming from that we are loaning out. When we get into all of these weeds, we breed distrust.
You mean
Yeah.
Pepsi?
Betsy.
Yeah.
Can you
Yeah.
with all due respect,
Yes.
Senator Cummings, can you explain that to me as the new executive director? Because I don't, what is that distrust that you're referring to?
Well, the fact
Take
that
a minute.
this has, veggie is the newest and probably the best because you have to perform before you get the award. There's some basis. But
I missed
There
the
has
analogy.
habitually been something that's hit the news with what he, last time. And there was a big thing, the guy that was doing the black box, the retired, and there was some
So
big,
we're only talking about, do we come
Yeah.
back after the floor right now? Because we can't continue this level of
okay.
conversation.
Now, I'd say we send it along, but before
Mhm.
this
Okay.
comes out,
And both the same.
Vita has to be,
You mean Vepsi?
You-
You mean me?
yeah, the
Yeah.
whole, you need to present a professional and a clear understanding to the legislature as to where the money's coming from to cover the money
Right.
you're doing. And it just becomes more focused when you're giving money up
Right.
out front.
If this is, we have not done much besides advance the sunset for years. And so if we are going to take this step, and if we are going to repeal the sunset, which I think
Right.
we believe in as a committee, what you are hearing is a problem we share that we need to start with. This is veggie, this is the Vexy Council, this is
Right.
VITA. Here are
Yeah.
how they all function, here's their governance. Just, I'm not trying to be an angry chair, but this does not cut it for what we are needing to do to re-educate the legislature
Second,
about this.
Thanks.
It's like us having to go to the floor and say, this is a TIF.
Yep.
And they've worked, trust us, like, we have not delved deeply back into why this has value and how it's going to be managed in a way that mitigates risk in a long time in the
That's true.
legislature. And repealing the sunset, is something we stand behind as the Economic Development Committee, but is a huge deal. And we need more help than we've been
Yep.
given with these
Yep.
flowcharts.
Well,
So you
that's-
need to like.
No, that's great
session.
feedback. So as the person who's been sitting in this chair for less than 60 days, I'm happy to work with the folks at ACCD.
Right.
You know, our staff
If no one
did the
has
best
told
they
you
could
to
in
the
24 hours.
legislature new as of 4 years ago. From 4 years to now, 2/3 of the
They
legislature
don't-
is new, and we have not had a conversation at this level because we've had a pandemic and we've given different IAM in different ways,
Yep.
and federal. That is the end of this conversation. So we are going to need much more help, and you can be in touch with me and other members of the committee this weekend to say, does this work? Does this work?
Right.
But we need help.
So,
The
Okay.
end.
given that we have 4
Yes.
minutes to pass this,
Yeah.
it sounds like we have agreement that we will pass this language, it will then get committed to finance for continued
No,
work.
you don't-
No, we're not committing it to
No.
finance.
Finance.
Approach is fine, and the floor is the
Yes.
big,
Okay.
Yes.
and approach will ask you similar
Yeah, and
questions because
questions
there's
is
no money.
communications tools and is what is needed when it gets presented to the floor. And we recognize, I certainly recognize that you're not gonna get this to mathematical accuracy
Right.
to the penny by any means, but what you do are you're supporting some of the assumptions that we are putting into it.
Right.
And when businesses make decisions about whether or not they're gonna do something, they don't do that either. There are a lot of other things that are
Right.
intangible. We recognize, and I certainly have argued, that there are a lot of intangibles in this kind of bill and program that we do in fact take on faith, because you can't audit it. You cannot audit a
Right.
Pepsi program as to whether or not I did, period.
Right.
Auditor Hopper is right. But at the same time, it doesn't mean it doesn't have value because you can't audit to that degree of preciseness.
Yeah.
Fair.
Communicating that fact of how you are basing the decision, that's what's critically
Right.
important.
Yes, thank you, Senator Buck. Help us help you. Between now and next week,
We're your friends.
we are your friends, and with friends like these, so
You can
you,
imagine what the end
right,
result.
that's what I, that's
No,
exactly right. Right. So we're gonna go to Rick to make sure we feel
Yeah.
comfortable with the language we're voting out, and
Yeah.
we still need to topically and conceptually align so that we can help you explain this to our colleagues. Rick.
Happy to do that.
So, Madam Chair, 1.5, which is not posted to the webpage, because I haven't sent it to Macaulay, nor do you all have a copy of it. This is just a few changes I made
Okay.
I haven't made anything since we last talked.
I don't think we should vote on something that's not publicly
I agree.
available.
Joan, as Joan, did you get Joan's email?
I did, well, I talked to the committee about that.
So you wanna present it to us and then edit while we're here and then vote while it's publicly
You, I
available?
mean, it's up to you as far as time, I'm not sure we can do it all in.
Well, we have 5 minutes right now before we have to be on the floor.
Can you send this draft to Magali?
This current, yeah, this doesn't reflect any changes since I left.
But it's not on the web.
It's not, maybe
Okay, I don't wanna vote on anything that people can't access in the next 5 minutes.
say.
I don't know how we've usually done it, but we also haven't edited things like, while we're.
Well, we have that, but not recently.
So does that mean we come
No.
back after the floor?
No, it just
Only
means
that if I get
that he
guaranteed
takes
I'll
us
get lunch.
30 seconds to email it and we get it
I
up
just sent
and then.
Okay.
Let me talk while she's
Yeah,
receiving it.
thank you.
So again, section 1 is the sunset repeal. Section 2. No changes, just, does it stay 5? Is that the understanding?
Up
5
to-
for everything.
I thought it was
Up
up
to
to
5.
5.
Up to-
Means up, means the, means up
That's
to the
regular,
consecutive
bitch.
5 years.
That's fine. That,
But this is everything
This
now,
is
everything
years.
is 5 years.
Yeah.
And you have discretion in the award period, right? So it doesn't need to say up to 5, Joan?
Up to 5.
It needs to say up to 5.
Yeah.
Okay,
No,
no,
this.
Currently, this is current.
Oh, this is
statute.
current statute, yeah,
Yeah.
you don't need
Second
to
5
change,
years.
you
Yeah,
don't need to
that's
change that.
okay.
Okay, so this is definitions, award period. I don't think the incentive loan is, the forgivable loan is part of the award period, is it? Commissioner, is that part of it?
No, because it's not, that's,
The award period is just for veggie, for the.
It's
Oh,
Okay,
because
classic
it's a direct
statute.
cash
Yes,
benefit.
that's my
Thank you.
understanding, okay.
Extremely helpful distinction.
Yes, that's why, okay. And then really, the email I received from Joan was about when we refer to the forgivable loan, it should be 5 years and not 3 years.
Oh,
That's-
It should be
Up to 5 years.
Okay, so that's gonna require a new version.
Okay.
Let's see here,
Did you already post it? Okay, but that's gonna make it 1.6.
it's gonna make it 1.6.
That's fine, but now we have 1.5 up
Right,
that people can see as we make changes in real time to, and it becomes 1.6.
So the other change was
to the
where,
maximum total award, Senator Harrison. I've been in House Appropriations for the last hour and don't have much time to think
That's
about
okay.
this. I think it's okay.
We got some,
Okay.
we're gonna stuff, we're gonna.
Okay, so this is this what you all are talking about here, this
Yes. Wait,
is under forgivable loan.
uh-huh,
This is the determining the incentive.
yes,
Right, the qualifying business section.
Yes.
right.
So are we talking about,
There's no
At a rate-
initial 3 years of the loan term, it's up
How about
to
just- how about
5,
just
what
loan
just the
the
loan
loan
term?
term?
Thank you.
Yeah.
Yeah,
Yeah,
amazing.
During
then
the loan term.
During the loan
How
term.
efficient we
during
get.
the loan, during
Yeah,
the loan
Yes,
term.
good.
because
Really
the OB can set the loan term.
yes,
right,
Right, that's
Yeah.
Loan term.
yes.
So you can
3
set it
years
to
to get
20
there
years.
in line 3,
Thank you.
line
Yeah,
7.
and at the end of the loan term, good.
Isn't this fun? Well,
So far, these are all Scrivener's errors.
Right,
Previous loan term, just loan term here, right? At the end of the loan term,
yeah.
okay, loan term.
ooh, we put 3 years in a lot of places. Okay.
I think that might be it.
Right, so that doesn't materially change the bill, so it's,
But he's still done it to 1.6.
okay,
I mean, yeah, you need to have a new version.
right.
But can't we vote?
You change.
Yes.
I mean, these are Scrivener.
Yes, we
Yeah, I
don't,
move up
yeah.
to approve
we're at 1.6.
1.6.
if they took out,
John,
Where,
4.7,
the second
That's
part of,
hold on,
where it says that the applicant pays interest to Vita for 3 years, it should say pay interest until which time the loan is forgiven.
where's that?
right here.
Paste it first, let's see.
Further.
Because we don't say 3 years anymore, so it's good.
Wait, say it again, Joe?
oh, it's, well, I don't know, in my version, it's totally different. Where is it?
What's the header?
Forgivable loan incentive program,
Yeah.
loan amount and term.
Yeah.
We've got B, and then there's one.
Yep.
And A, B, two. It's under two, I think, qualifying business is approved for his loan, receives the loan, but shall make monthly interest payments on the loan at a rate during initial 3 years, so take out the.
I did,
Yeah,
During the
already
loan
done.
term and pursuant to the
Yeah,
loan
yeah,
agreement,
already.
that's,
Okay.
Yeah.
that should
Already.
satisfy.
That should satisfy
Yes.
it, yeah.
all right,
Uh,
sending to Magali.
Okay, thank you.
And I have a motion.
I'll second it.
Okay,
Okay, Senator Brock,
Yes.
Senator Clarkson.
Yes.
Senator Cummings.
Yes.
Senator Harrison, yes. Senator Robinson.
yes.
Okay, 5-0-0.
Thank you, everyone. I'm going out and.
Yeah.
You're gonna be
Great,
brilliant.
yeah, that's great.
You're gonna be brilliant.
I look forward to learning. it.
Oh, I'm sure.
So
what we can do if we
Where
get it
is
this
my
way every-
cheat
I
sheet?
know. Well, it could have blown up.
Thank you,
many
Rick.
times.
Thank
Thank
you.
you all. Yeah, thank you.
Thank you, Jessica.
Mhm.
You're
Yeah,
welcome.
okay.
I look forward, I will make sure that I am available to come up to Montpelier, so I will be there
Great.
next week.
Perfect.
Okay.
We have work to do.
Yeah.
We
So
do.
we will
I
have-
look forward to it. Yeah,
Thank
yeah,
you.
no, I'm excited to do it.
Are you recording it?
If I have lots of help, yeah.
Yes. You will
Yeah.
have lots of
We'll
help.
all help you.
All right,
Lots of help.
and we should coordinate
Yeah.
with Wendy or who over the weekend to.
I'm happy to be copied.
Okay. Okay.
I think does the committee all want to be copied because people have opinions on what.
I think that would be good.
Yeah.
I think it'd be useful.
Yeah.
Let's just everyone copied until some branch of the conversation is more technical then.
But we want to improve the infographic, we want to know.
Yes,
Heather,
do.
Heather's
No, that's- we're
really
here to
good at
help.
her
but
infographics.
we need to
So we're all-
start with like
It's
a
not part of
form.
I'm not the
We are.
infographic girl, but